Now getting into the small business relief. So the small business relief is first, it is only applicable to the resident taxable person. So only the one who is having a resident, he's a resident person in UAE, are eligible to be getting a benefit of small business relief, and they need to have a turnover not more than 3 million. It should not exceed more than 3 million, and this benefit is available. The three small business relief benefit is available until December 2026. So it is a temporary relief which are given for small businesses up to 31st December 2026. Now, what is this benefit? Basically, the benefit is that they will not be paying corporate tax, but they, of course, they need to maintain their books, the financials, and then they have to file the return, but the return filing is simplified for them, which will look into this. And then, if you look at it, what are those? What benefits? The CT registration is still required. The corporate tax registration is still required for the small businesses, whether they elect or not, but they need to be registered in the corporate tax. And then the requirement for full tax return, so they did not file the full tax details, as in the which would be applicable for the normal businesses. So those who have opted for this small business relief, they will be filing a simplified tax return. And this simplified tax return, this small business relief is opted when you are actually filing your return. So there you have to declare that you are opting for this small business relief, and the tax income computation will not be required because you won't be paying the tax, those who have opted. But those who have not opted, so there could be possible that a business man who's having a revenue of like 285,000 to 2.85 million, but still he has not opted for small business relief. So if that is the case, if he's not opted for the small business relief, then he would be following the standard practice as a corporate tax liable person. Then interest expenditure carry forward, he cannot carry forward the interest expenditure. As if like there's a limitation of 12 million or 30% of earning before interest and tax depreciation, which can be carried. If that is not claimed in year one, it can be carried forward up to 10 years. But a business who has opted for the small business relief, then they cannot carry forward that in the next future years. I mean, until till the time is being opting for the small business relief, he cannot carry forward and claim it from future period. Whereas others who have not opted can carry forward. Transfer within the qualifying group, that is, there is no, they cannot transfer their losses within the group. We'll look at what is the definition of qualifying group. Transfer pricing documentation requirement, they don't have to follow the transfer pricing document requirement within the group transactions. And then whereas those who are not opted, they have to follow that. Then compliance with arm's length pricing principles. So arm's length principle is basically benchmarking of your transactions within the connected party with the related party. So the benchmarking has to be done. So that principle still has to be followed by the small business relief opting the businesses, and then those who are not opted as, they have to follow that. And then accounting records, they have to prepare the accounting records based on the cash basis principle. And then in terms of the revenue reporting, the revenue for small business relief has to be calculated or computed based on the IFRS revenue recognition, which is IFRS 15, because that is the basis which will determine whether they are within the limit of 3 million or more. And then the FTA can ask for those records, how they have computed, derived that. So that record has to be maintained. Whereas for those who have not opted this, they might not be following the IFRS practice standards.